Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day to start things off. In a weird turn of events, the US IRS, the Internal Revenue Service, has published its first guidance in 5 years for calculating taxes owned by cryptocurrency holdings. Industry members have been eagerly awaiting the update since May 2019, when IRS Commissioner Charles Rettig said the agency was working on providing fresh guidance. The agency's 2014 guidance left many questions unanswered, and the crypto market has grown more complex in the years since, which is also very fascinating as well. I'll get back to that in 1 second. As expected, the guidance notice released on Wednesday addresses the tax liabilities created by cryptocurrency forks, the acceptable methods for valuing cryptocurrencies received as income, and how to calculate taxable gains when selling cryptocurrencies. Drew Hinks, a lawyer with Carlton Fields and the general attorney or counsel to Athena Blockchain, told CoinDesk that from the tax collector's standpoint, this is the right answer. Sure. Resolving a long-standing question, the guidance says new cryptocurrency created from a fork or an existing blockchain should be treated as an ordinary income equal to the fair market value of the new cryptocurrency when it is received. In other words, tax liabilities will apply when the new cryptocurrencies are recorded on a blockchain. If a taxpayer actually has control over the coins and can spend them. James Mastracchio, a partner at Evershed Sutherland, told CoinDesk that this applies when there is a distinctly different cryptocurrency as a result of a hard fork. The IRS language might change or might create more confusion. Oh, that is definitely going to be happening. It says, while the new guidance offers some much needed clarity on certain questions related to calculating basis gains and losses, it seems confused in the nature of the hard forks and airdrops. It says, one unfortunate consequence of this guidance is that the third parties can now create tax reporting obligations for you by simply forking a network whose coins you own, or foisting on you an unwanted airdrop. Before we even continue further, just a couple things to kind of unpack first. The most important part for me is the part that I highlighted on the screen for those of you who are not looking. It says, and the crypto market has grown more complex in the years since. Every single time, let's even shorten it to 2018, when we were threatened across multiple countries that we were going to have these crazy amounts of cryptocurrency regulations. One of the most important things was that we were waiting for quite a long amount of time for just to have some type of a basis of information through multiple countries as to exactly how cryptocurrencies were going to be treated, taxed, regulated, if at all. And one thing that kept on sticking in the back of my mind was, me personally, the regulation that they're going to give is probably going to be excessively outdated and will probably only rely on the information that they received anywhere between 2014, 2016, maybe the beginning of 2017. And it will probably take around a good year and a half, if not 2 years, for the paperwork that they were doing to get through some type of a system, so that everyone can have their little signing ceremony, and that we could finally have the regulations. The interesting part, and I guess even what it says right here, the unfortunate consequence of the guidance. Part of the problem with this entire thing, the information that they've given out, is that if you are dealing with or own, this is just how I'm reading it. This is not me telling you what to have or to own or what should be in your pocket. It's more of if a coin you happen to own is not decentralized enough, or it's possible for someone to simply stand up and go, I don't like this coin, I'm going to make a brand new coin, and therefore they fork it, especially off of a very popular coin that maybe hasn't been reported to tax authorities and maybe people just don't know enough about it. They fork it and they figure out that you have it, then you are doubly liable in that situation because your coin was whatever. It just creates a very weird situation. Even the way that it's kind of, even as I continue on, the way that it's phrased is more like a, tell us what you have and we'll tell you if you have to pay. And at some point, nearly every coin has had some type of a fork or some type of a situation where it could potentially be taxable for certain people holding cryptocurrencies. The other really important part is that a lot of it comes down to the actual spending of it, which we're going to get into in a couple of seconds. Where is it? The new IRS document also offers long-awaited clarification on how taxpayers can determine the cost basis or fair market value of coins received as income, such as from mining or the sale of goods and services. Cost basis should be calculated by summing up all the money spent to acquire the crypto, including fees, commissions, and other acquisition costs in US dollars. A third key issue addressed by the new IRS guidance is how to determine the cost basis of each unit of cryptocurrency. If you're at all confused, you should be. The way that these tax laws are written is that so that you're terrified and that you're annoyed and that you have no idea what's going on, so that you end up doing things that you probably should not end up doing, that is probably not even within the legal basis. Rather, you may not break any laws, but the way that they make sure that they word these things is to make you afraid that you may be breaking some type of law. The third key issue addressed by the new IRS guidance is to how to determine the cost basis of each unit of cryptocurrency that is disposed of in a taxable transaction such as a sale. This is an issue because someone might buy Bitcoin in multiple transactions over a span of years. When they sold some of it, it was unclear which purchase price to use for calculating taxable gains. The value of the crypto purchased on the exchange is determined by the amount of the exchange sold it for US dollars. The income basis in this case will include commissions, fees, and other costs of the purchase. Still confused? Rightfully so. You definitely should be. The idea is, I'll put it to you this way. And multiple countries actually have or had tax laws like this for cryptocurrencies, but a lot of them scrapped it. Thank you, Portugal. Because it was incredibly confusing. The idea was, let's say your goal is to own one entire Bitcoin. You're like, yeah, I'm going to do it. It's going to take me a while, but I'm going to do it. In 1 3-month period, you buy 0.20. 3 months later, you go, okay, I saved up enough, another 0.20. Another 3 months later, 0.20. Continuing until you finally have an entire Bitcoin. You go, yes, I finally did it. At some point in another dimension, Bitcoin ends up hitting $5 million, and you're like, okay, bam, time to sell. And you sell all of it off. The tax people go, when did you receive this Bitcoin? Well, I got it a couple years ago. Don't remember exactly when. What you have to tell us exactly when you got it. I don't remember. It's one whole Bitcoin. Yeah, did you get this Bitcoin in chunks? I think so. How many chunks? I think it was around 5 of 0.20. Okay, when did you get them? How much did you buy it for? And now there's a different taxable event and different taxable time period because you bought them at different times and for different prices. See how nonsensical all of this is? And I'm going to have one final point by the end of it. Where's the other really fascinating information? In a disappointment to crypto users who like to spend their coins on everyday purchases like cups of coffee, the IRS specifically said it would not create an exemption for transactions below a certain threshold like we've seen. I believe this is happening in certain countries in Europe, Portugal omitted because Portugal. Other countries around the world also have this. They've realized that people are going to be using their cryptocurrencies to be able to make everyday purchases at some point in the future. And the idea is, if you are making a purchase that is below $1,000, 500 euros, 800 this, 900 that, cool. Don't tell us. We don't really care if you're buying a new bed or if you just bought a new phone or if you just bought a new pair of clippers with your cryptocurrencies. However, if you're buying something over, $20,000, $30,000, $40,000, let us be aware of it. The IRS said they will not create an exemption for transactions below a certain threshold, meaning anytime you could spend 1 cent worth of a cryptocurrency and you have to let them know paying somebody for service will result in a capital gain or loss, which should be calculated as the difference between the fair market value of the service you received and your adjusted basis in the virtual currency exchange. You should all be confused. Purchases of goods and services were deemed taxable when the IRS issued its original guidance in 2014, which said that digital currencies were to be treated as property rather than currency for tax purposes. So, kudos on them for finally releasing information 5 years later. And I'll even give them, it was a definite 2.5. It was a hard 2 years. Good for them. Once again, we live in currently, we're in 2019. Many people have tablets. Just about everyone probably has a smartphone, if not a laptop. And you're able to actually unplug the laptop. Actually, before you even do that, you can book a flight, Say, I want to go to Puerto Rico. I want to go to Portugal. I want to go somewhere where I'm not going to be taxed on my cryptocurrency holdings. If I buy, sell, trade, I can use my money freely. You unplug your laptop, you pack a bag, you get onto a plane, and you go to that country. Simple. I don't understand what the fascination is for thinking, even, you know what's even crazier? A couple of weeks ago, there was an article, and I was like, I'm not going to read this. It's whatever. There were a couple of tax people in the cryptocurrency industry, and people just in the space in general, the entirety of the crypto sphere. And they were like, any type of negative cryptocurrency regulations will just cause more people and more companies to leave the United States. They said there's been, it's what they call a brain drain. If you impose some type of a ridiculous restriction on something in a growing industry within a certain space, and people realize that they can walk or get on a plane to go somewhere else, the brains that were in that area are drained from that country and they go somewhere else. Even the people, remember a couple of weeks ago, which I was surprised at because these are usually people who definitely play ball. The people from Coinbase and a couple of other places, they were like, yeah, we need really good regulations because everyone's leaving the United States. So if you were looking for some type of tax guidance when you buy your coffee at Starbucks, here it is. If you were wondering how to deal with hard forks, there you go. I'm shocked that they did not include ICOs. I was expecting something, some type of archaic news as well, as no one really uses ICOs. But even for airdrops, it's like I wonder what goes through their minds when they create these things. And I assume we're going to have more regulation around the year 2024 that deals in IEOs and other things that are currently happening within the cryptocurrency space that no one will be talking about over the next couple of years. Once again, if this does, however, send a chill down your spine, I couldn't find another sentence. Simply just focus on some of the more important coins that aren't as manipulatable, and simply just don't sell. I mean this in the most realistic way possible. Just hold on for another 3 years and move to another country. I'm not even slightly joking. Anyway, this is the everyone was quite excited for this news. Not even joking. This was everywhere. And without further ado, let's move on. No one here should be surprised at all. The U.S. Securities and Exchange Commission, or the SEC, has rejected the latest attempt at creating a Bitcoin exchange-traded fund, or an ETF. The SEC announced on Wednesday that the ETF proposal filed by Bitwise Asset Management in conjunction with the New York Stock Exchange ARCA did not meet legal requirements to prevent market manipulation or other illicit activities. The SEC placed the burden on the New York Stock Exchange ARCA rather than the Bitwise proposal itself. To date, the SEC has rejected all Bitcoin ETF proposals, citing market manipulation and fraudulent activity concerns by stating, and I do quote, "The Commission is disapproving this proposed rule change because, as discussed below, the New York Stock Exchange ARCA has not met its burden under the Exchange Act and the Commission's rules of practice to demonstrate that its proposal is consistent with the requirements of Exchange Act Section 6B5, and in particular, the requirements that the rules of a national securities exchange be designed to prevent fraudulent and manipulative acts and practices," end quote. For those of you who do not know, the SEC thinks that the entire cryptocurrency market is manipulated, and therefore no one should have the right to really propose anything, or rather anything that could fall under the jurisdiction of the SEC within the United States should not be legal, or therefore should not be released, because they don't like the cryptocurrency market. I have my own feelings for this. We've spoken about this many other times before. The entire point being is that, wait. Tangled on the chair. Still am. Wait, there we go. Okay, anyway. The point is, we should have all seen this coming. I'm not surprised, not even a drop. I don't think that they're going to be proposing, or rather allowing any ETFs anytime soon. Bitcoin doesn't need an ETF. I'm still shocked that the cryptocurrency market goes wild whenever we have a proposal for an ETF. At this point, it's fairly certain to me. This is how I feel. This is my personal opinion. And someone was asking before why I say that. It's just because a lot of times you may not have been here for a long time. I will say certain things and people don't hear that it's me, and they think I'm saying it as like a blanket across the entire cryptocurrency community. So this is, once again, just my opinion. What the SEC has said before and what they're saying now is very different. It comes down to now the what they say is that the market is manipulated and therefore it's not ready for consumer this or for so and so that, and therefore things have to be rejected until the market kind of gets a hold of itself. I'm going to assume, here's an assumption, by the time that Bitcoin is over around 25, maybe nearing 30,000, even potentially the $1 trillion mark, we may then have an ETF approved, because behind the scenes, my opinion, it's all money. Someone's either telling them to either keep the price down, or they themselves, assumption, probably have Bitcoin themselves and are trying to keep the market down. It's all, a lot of it is manipulation. It's like, what's the word? The SEC can't control Bitcoin itself or tax Bitcoin itself or do so and so with Bitcoin itself. So something that is derived from Bitcoin that could potentially fall under the jurisdiction of the SEC has to then be controlled by them. I think this is how they gain control of parts of the market. This is, once again, my opinion. However, anytime that we get news about a potential Bitcoin ETF, don't hold your breath. This was very 2018. I think that it's a bit of a trip for them to know that they have this type of control over a sector of the market. But this isn't, no one really cares about a Bitcoin ETF anymore. I think still people sitting inside of these offices. Anyway, it was rejected. The market really didn't care. Thank the goodness. And let's move on. Next up, Binance is now accepting Fiat, very interesting, through Alipay and WeChat, opening up the exchange to peer-to-peer crypto transactions from China. You heard that correctly. The move follows a September announcement concerning the exchange's intention to add over-the-counter trade options for an additional Fiat on-ramp. Although an expected development, the move was first disclosed on Twitter and later confirmed by Changpeng Cao on Wednesday. For now, Bitcoin for Fiat trades are only available. That is totally fine. One of the largest social media apps globally, listen to this, WeChat currently has over 1.1 billion active users, according to Statista. Payment application Alipay has over 900 million users as well, per the China Daily. Since 2017 banning of cryptocurrency exchanges by the People's Bank of China, peer-to-peer trading has predominated, is that a word, in China. Earlier this year, not even important to read the rest of it. The point being, Binance is very smart. Binance has infiltrated a market that does not allow many other people, and I wonder exactly how they did it. For those of you who do not know, Alipay and WeChat are controlled by said local government. Everything you write, type, send, buy, sell, whatever you do is recorded. So this is why it's very fascinating, because we had information at the beginning of this year. Remember when the Chinese government released the PDF pamphlet information, and they were like, Bitcoin's good, Bitcoin's great, Bitcoin's awesome, Bitcoin's this. You can buy Bitcoin. Remember, like there was that really weird photo of the guy like proposing to the girl and like handing her Bitcoin, and she was like crying and like she said yes after. It was, it was very, 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 very weird. This has led me to believe that the local government there is desperately looking to get into the cryptocurrency space, but we're trying to figure out how. And the other way that they've been managing to be able to do it, we also had news at the beginning of this year that people within China have been buying up Bitcoin, and they've been doing so simply by buying it over the counter. How odd it is that Binance also just offered an over-the-counter trading service for people within China who also want to use Alipay and WeChat. Kind of odd. Very interesting that they were able to do so. There has, to my knowledge, been no other or very few other companies that have been able to do so. As of now, the news that we had is that people within China have been buying up Tether, however they've been able to do so, and this is how they got into the wider cryptocurrency market. Quite fascinating. I assume we will get news about this over the next coming weeks as far as how much money has been put in through their system, keeping also in mind everything that happens between these apps, all of the information goes through the government. So this lets me know that they had some type of governmental discussions and therefore this is allowed within the country, because otherwise it would have been wiped out of existence. Quite fascinating indeed. Next up, here's a very keep this in mind, because I read through it and I said, okay, this seems to make a bit more sense. Ethereum shifted its use case in the third quarter of 2019. Until recently, distributed apps, or dApps, were seen as one of the biggest potential drivers for ETH adoption. dApps even displaced the previous use case for Ether as an asset for fundraising in ICOs. Now, the latest dApps report by dapps.com shows that the third quarter saw a giant shift in usage, as well as the competition between Ethereum and other networks. Decentralized finance, or DeFi, a collection of various collateralized crypto lending schemes, took over the Ethereum network. The transformation sparks hope that ETH may remain a valuable asset due to the promise of robust returns from lending schemes. At the same time, former ETH dApp users dropped off in vast numbers in comparison to quarter two. DeFi schemes, on the other hand, added the equivalent of $525 million in ETH collaterals. The creation of DeFi apps, or dApps, drove development in the past quarter, making up 58% of all users in the past quarter. In total, 132,000 users were attracted by DeFi in the past quarter. Overall, the Ethereum network attracted a historical 310,000 users. Over the past couple of weeks, I kept on saying, why is it that we keep getting news that this organization, this company, this so-and-so, this blah, 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 is building an app, they're using Ethereum, they're using a so-and-so, they're building ERC20 tokens. Everyone's simply just building on top of Ethereum once again, even after the heartbreaking scenario that we had in 2018, where we were told in 2016 that we were going to get Ethereum 2.0 in 2018. Did not happen. A large part of 2017 was the Ethereum ICO craze. 2018 was, my Ethereum is better than yours, and my Ether network can hold games and applications and dapplications, and I can do this, and I can build cats on it, and I can build dogs, and all this stuff can be traded. And then the market halted, or rather the network halted, slowed down dramatically because no one could use it because there were too many things on it. However, there has been a noticeable shift. You've noticed it. A lot of the gaming platforms have moved over to Tron and to EOS. Everything else has simply, anything that is institutional-wise or banking-wise, as far as writing information, smart contracts, has moved over to the Ethereum network. Here's an article right here that we had from Ethereum co-founder Joe Lubin, that he joined the Hyperledger board. Hyperledger being one of the consortiums for decentralized finance and this and so and so and so. And I think not IBM, all the major names are joined onto it. And even more so, I feel like we should have seen a lot of this coming. Here's an article from 2017. It says Russia's largest bank joins the Enterprise Ethereum Alliance. And another one from 2017, MasterCard and Cisco join Enterprise Ethereum Alliance. I think the overshadowing, the main goal has probably always been to make Ethereum some type of a financial platform, which is really weird because the original, which is, we don't hear about that anymore. The original idea for Ethereum was to be a decentralized internet. The entire idea was that Ethereum would be able to scale by last year. It would be large enough and robust enough to be able to handle over 1 million to 10 million transactions per second. I did not say that incorrectly. You can definitely find the information, especially with Plasma and Casper, neither of which we have yet. And therefore, the idea was that everything on this planet would be able to migrate over to Ethereum, and we would live happily ever after. However, we know none of that happened. So as from what I've also heard and what I've read is that a lot of financial companies are betting big on Ethereum eventually being able to scale. And also just in general, as it has, I mean, largest banks in the world, MasterCard, Cisco, I think IBM is also part of it, so is MasterCard, and so is blah, 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 all these names on top of it. So the idea is that when sending information back and forth, i.e. sending files or sending this or receiving reports or so and so and so, waiting a good 8 seconds for it to arrive, if not maybe 18 seconds, is totally fine. Just that people don't want to wait 18 seconds for their character to move in a video game. But when sending files back and forth, it seems to be totally fine. I wonder if this will continue. The original ideas for Ethereum were, once again, a worldwide internet, which no one talks about anymore. And then it went to a rival against Bitcoin, which no one talks about anymore. We also thought that Ethereum was also going to flip Bitcoin and become the #1 coin, which also no one talks about anymore. The idea was also that the ICO craze would be the main usage point for Ethereum, i.e. anyone looking to build a new coin or anything on top of Ethereum, or in general, would simply use the Ethereum network as their basis. And then it became, what was the other thing? Oh, and then for video games. All 5 of these things, when formed together, make Captain Planet. Nope, they make the Ethereum that we have right now, because nothing has happened. So we'll see how this changes if this continues. I assume we're going to hear more information about maybe one of those 5 things in 2020 should Ethereum actually have its upgrades. I'm not really holding my breath anymore as far as the upgrades for Ethereum. It's more like I think it would be really weird if they tried to make the same rhetoric for Ethereum as they do for Bitcoin, i.e. It doesn't have to be upgraded. It's fine just the way it is. It's not. But anyway, that's the Ethereum no video games DeFi. Yeah, everything for finance seems to be put on top of the Ethereum blockchain news for today. That was very awkward. Let's move on. To kind of a little bit finish things off, for those of you who do not know, Bitcoin jumped by 5.1% on Wednesday to the highest price in 3 weeks, after the Federal Reserve said it would print more money to expand the size of bank reserves. That's crazy. Seen as a move by the U.S. Central Bank that could spark inflation. So, currently, Bitcoin is floating around the $8,600, $8,500 and something area, depending on where you're getting your cryptocurrency prices from. A lot of people think that it's a couple things. Rather, the main thing that people think that it is the information about the Fed talking about printing more money. I think it says it around here. It says Federal Reserve Chairman Jerome Powell on Tuesday flagged openness to further rate cuts amid global economic risks, and said that the time to allow the Fed's asset holdings to begin to expand again is now upon us in order to ensure money markets function smoothly. This follows, and so blah, blah, blah. It's a long story short. Rate cuts have already been cut over the last couple of weeks. They're going to try even talking about cutting them further, which is ridiculous because many countries around the world already have negative interest rates. You can't have negative interest rates. It doesn't make any sense because you then are paying the people who are taking out the loans to take out the loans. It's nonsensical. They're talking about printing even more money, which is also fantastic. Please, by all means, just go for it. And the other part of it is that the last couple of weeks we heard that the Fed planned on, I think, pumping, what was it? 57 billion is the number even here? They planned on, it was 57 billion or 70 billion, I think, per day into the market to keep it afloat. Logically, this does not make any sense. It's just not sustainable, especially if you're planning on cutting rates as well. This is what people think could be the actual reason for the price rise. However, the timing is a bit off. This was about a good day and a half ago. Bitcoin's price only started rising around 6 hours ago. I think, myself, it could be a mixture between the IRS tax guidance. And I know it sounds weird, but it could be a possibility. A lot of when institutions talk on the news about why they have not yet entered the cryptocurrency space, it's because they don't know how to pay taxes. They don't know what to do. What do we do with our money? Remember, I told you this before. There's a huge difference in you cashing out $1,000 having to pay whatever amount of taxes, and an institution cashing out 129 million. Bit of a difference, and nobody really wants to pay too little on their taxes, or not the amount that they have to legally pay, and then the IRS hands you a letter and they're like, nope, you got to pay us another 40 million in your face. That's not something that anybody wants. So I think this could have actually caused a movement upwards, because the timing seems about right. It could also be, and I would not be surprised, I think a lot of people aren't paying attention to this news as well, the fact that people within China can legally, which we also had news a couple of weeks ago, the Chinese government said people within China can buy Bitcoin and hold it. They cannot trade it, but they can definitely buy, and they can buy over the counter. The fact that Binance is now linked up in some sort of way to Alipay and WeChat, and they offhandedly just got access to around 1.1 billion people around the world, if not focusing just on China. That seems like more of a logical reason as to why the price of the market would have moved up. For those of you who were not here, during 2015, 2016, 2017, China controlled the market. And I don't mean they were in it sometimes. Wherever the market wanted, wherever they wanted the price to move, it moved. This is why we saw a huge slump when China was like, nope, we're banning it during 2017, because they were in control of the entire market. So there's now a little wormhole for them to be able to, maybe a bit more difficult, and maybe things are a bit more surveyed. However, there's now an opening for them to be able to buy Bitcoin legally in the country. That seems like, to me, a more bullish reason. Even if it was only 500 million people, that's still a lot of people. 1.1 billion people having access to Binance now, legally. And also, however late they may be, but still some type of guidance for when you sell, buy, or trade cryptocurrencies, or there's a fork or an airdrop, also seems highly relevant. To be fair, and we saw this before as well. Whenever the Fed was doing something over the last months, Bitcoin's price didn't really move. So it's a combination of either the IRS news or 1.1 billion people now having access to Binance. You choose. As always, a very special, nope, that's wrong. Where did that come from? Okay, that's weird. Something like, it was like I had tried to make a phone call on my phone, which made no sense. Anyway, as always, a very special thank you to my Patreon supporters: Professor Wally from Gunbot University, Todd Mullis, Adam Graysick, Mohair Maroney, Master Ventures in Thailand, Brady Niels, Woody and Daisy, Triple M and J, Jared Schneider, Wise Night Owl, 242 to the World, Crypto Joe, Bankroll Network, Adobo, Mill Louise, Mechanic, Strange Radio Central, Crypto Artist, Coldy 3D, Cryptopolis, Nicholas Runner with One Piece One Love, Damien Setsuna, Nick Kanaya, Richie Rich the Third, Vlad the Impaler, Crypto Beer Shipmate, Paxis, Nick Mangialavori, Anthony Charles, Jim Gardner, Jeremy Fox minting coins, Miller Hitch Test every day on Kyle Skips Leg Day, Yes to Crypto, and Bodie McBoatface. Thank you all very, very much for your support at the moment. The market doesn't make a lot of sense, except for the fact that Bitcoin is up. Ether's also up. No real news as to why it would have gone up. And as far as XRP's red, Litecoin's kind of up by 2%, EOS is down, Binance Coin is also down. One would assume with the Binance news that Binance would be up further. And this is why I'm like, why is Ether up higher than Binance? At the moment of me making this video, the only real news about Ether is the decentralized finance use case. I'm pretty sure that didn't cause a fevered rush to go buy Ether, as people were like, oh my gosh, a new use case. So I guess we'll maybe see some type of news as the day ends up going on. Nothing hyper significant. Couple of coins. It's just kind of a really weird movement in the market once again. Nothing really makes a lot of sense. I think things will only make sense once Bitcoin starts skyrocketing a lot further up. And then we'll see if all the coins are following, or if simply, once again, a lot of the altcoins end up in red, especially with their Satoshi prices. I hope you all enjoyed. Hope you all have and are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all, every single one of you, once again for watching and or listening. And I will most certainly be talking to you all soon. See you.